continue to work in the Pakistan market from here.
Yeah.
So yeah, Fortune, I was going to introduce Salman in a second, but Salman actually cosmopolitan guy. He is. I was also going to ask if he's in Canada or Pakistan right now, because with Salman, you never know where he. Okay, great. So I think we are all set to start. Hello and welcome everybody. Thank you for joining us today. Thank you, Fortune and Salman. Just for the audience, we want to know, please feel free to use the chat feature to share your thoughts as we go along. It should be on your bottom right. But of course, if you have any questions, there is a separate Q&A section. The way we will go ahead with this session, we're going to have an interesting discussion. Start with the discussion, get the thoughts of Salman and Fortune, and then in the end, we're going to break for some question and answers. Again, if you have a question, please post it in the Q&A section as opposed to the chat feature, as it makes it easy for everyone to address all the queries. If you have a question directed to a specific someone, please feel free to add the name. So without further ado, I want to introduce our speakers for the session today. Very excited to have both people. Introducing Salman Sarwar. Salman is a veteran retail banker. Currently, he is the chair of Green Peak International. And before that, he brings with him 25 plus years of experience in retail and consumer banking. And he has served as group head in Pakistan and Asia Pacific. At Green Peak International, Salman is going to introduce a little bit more about what they do, but they are also very well set in the retail banking sphere and enabling retail banks to improve their bottom line. Alongside Salman, also Salman is based out of Canada and Pakistan, currently in Toronto in the middle of the morning. Alongside Salman, our other speaker for the night is Fortune Mukuka. He is the director of Open Canvas Consulting based out of Lusaka, Zambia. Like Salman, he is also a senior retail banking leader with at least 16 plus years of experience across product segment operations across many different multinationals. And most recent position was at the head of commercial operations at Barclays in Zambia. So between Salman and Fortune, they've worked at some of the biggest banks in the world, serving retail customers all across. Very exciting for us to introduce myself as well. I am Umar. I am the head of partnerships and global strategy here at Hisab Kitab. Hisab Kitab, we provide white label PFM products that enable banks to understand their customers better and build loyalty with them. So without further ado, I wanted to get right into the session. Today, our focus of conversation, which has garnered a lot of discussion, a lot of questions of late, especially since the advent of the coronavirus, is what will happen to the future of retail banking? Will customer behaviors change? Will people visit branches the way they would before? Will people interact with their banks the way they would before? Are those customers' needs changing? And in that entire equation, what does the role of digital play? So with that being said, Salman, I will start with you. If you can give a high level, just for our entire audience, of what constitutes retail banking and what our general retail banking customers need, irrespective of COVID or not.
Okay, Umar, thank you very much. And welcome everyone, and really glad to be here with Fortune, brings so much experience to this forum and to this table. A good question, Umar. If you look at retail banking, and as you mentioned, I have recently in the last 7-8 years, worked with banks in Pakistan in helping them to build their retail banking business. And we do see, as a opening statement, we do see that the opportunity to grow and to get more share of wallet and to provide more products and services to solve more problems around the needs of customers is humongous. I mean, if today, if you look at the product penetration in markets such as Pakistan, an average product penetration is probably 1 to 1.5. And the opportunity to to provide products and services and product penetration as we measure it through product penetration is about 3 to 4 products. So the opportunity to grow was there before COVID. It is there today after COVID as well. But that's the way I see it. Banks that have gone in that route and focused on the retail customer, looked at the 4 needs of the customer: transactional, borrowing, savings, and protection needs. Have identified customers with those needs, which I call the valuable existing to bank customers. A lot of these customers are sitting with the banks, and then have gone out and tried to solve these needs, have done relatively much better within the banking industry than some of the other banks, and most of the other banks that have actually focused on either bringing in new customers or just going out and selling one product at a time, product of their wish. So as an overall statement, I would say the opportunity to grow retail banking business through product penetration, through taking care of customer needs by relationship building, is in multiples, and that is where how I would maybe set the stage of seeing, okay, now what are the opportunities given maybe something like COVID. I personally think that the opportunity post-COVID is also the same. Maybe the economies are slowing down for a while, so buying habits will change a little bit. But as the economies start to come back up again, the needs will remain the same. It's about how we will go and address those needs going forward. One of the things I would just like to leave on the table as we get into the discussion is that we need to actually look at how banks are changing their structures given COVID, because the first impact has actually been on the banking industry because of the measures that they've had to take. People haven't been able to come to office. They haven't been able to work from the locations they used to work. Organizations have realized that they have a lot of property that they have rented where people have come and work. All of a sudden, they've had to have these people work off-site from home, and all of a sudden that realization has started to come that we could do a lot of these things from through people working from home, and that has actually made banks that has made them think about their cost structures and their product delivery mechanisms. So that's something interesting to look at, but I'll leave it at that, and I'll let Fortune add to that, and then we can take the discussion forward.
Yeah, sure. If I could just maybe add to that. I don't know, Uma, you wanted to say something?
So
Uma, can you hear me?
Yeah. Uma, we're losing your voice.
Go ahead.
Yeah. So anyway, I think first of all, as well, just to thank you so much for the opportunity to be on this panel. I'm quite honored to sit alongside industry great like Salman, and obviously just to contribute to the forum. So thanks, Salman. Thanks, Uma. Yeah, I mean, retail banking, maybe just to add to the discussion around the opportunity and the context around retail. So obviously financial services, I think, remains, an essential service, that clients need as part of their everyday lives. So pre or post-COVID, I think it's really around thinking how can the business of financial services carry on in a safe, convenient, and easy manner for clients. So consumers remain with the underlying need. Some of the things that Salman touched on, the issues around transacting, the need to actually borrow, to save, and to create wealth or to protect it. So that remains as a constant, and obviously banks try to figure out and evolve around the space of how to provide these services conveniently. Clients are always looking at how do they get this. I think I would sum up maybe some of the key needs that clients have would be to say around convenience, simplicity, and a service that they can trust. So they need financial services. We all need financial services along those, kind of four broad areas. But the issue is, how do we access them conveniently? How do we access them simply in a much more trusted manner? And that's what determines how I pick one bank over the other. So with the advent of COVID, it's really around how banks can evolve into that space of providing this service, in a much safer manner, in a manner that clients can trust and rely on. I think the opportunity remains huge, for consumer financial services, and it's about how providers respond, with what's happening now. A number of mega trends, that also Salman touched on. But one other thing is, it's an increasingly, isolation economy that has kind of emerged out of people staying home during this period, and then as lockdowns begin to ease, it's trying to find the balance between those two. So yeah, those would be my initial remarks.
Yes, that's very, very interesting. I think very well pointed out, Fortune, that people. It's about getting the services across more conveniently.
So thank you guys both for that.
Go ahead, Umar.
Yeah. So sorry, can you hear me?
No,
Yeah.
Can't hear you.
Sorry, my connection was a bit weak, so I could not hear you guys. But I wanted to start. So I think thank you guys for the introduction. What I want to start on two things. One, I will Salman, you mentioned.
Umar, I can't hear you. Umar can't hear you.
The structure in banks is going to change. I will.
Fortune,
Yeah,
can you hear Umar?
I can't hear him clearly. Umar, I think your line is breaking. When you start speaking, we can hardly hear you.
Yeah. Umar, I didn't get your question because I couldn't hear you. Maybe you can, Javeria, if you can come in and pose the question, that would be better, because Umar, we can't hear.
Yeah, so hi Fortune, hi Salman.
Hi.
Javeria here. So yeah, let me just take over from here. One thing that so the difference between we see that because you were both involved with bank branches and how retail banking works. So one question would be that will the consumers stop visiting the bank branches altogether even after the pandemic ends, because people are getting more comfortable with managing their money digitally? So how will that trend change now? How do you think? So please.
Fortune, if you want to have a go first, then.
Yeah, sure, that's fine.
Yeah.
So obviously there's an interesting dynamic that has developed, right? Everybody at the start of the pandemic, went into panic, trying to figure out what this thing is all about. The natural instinct is to, jump to safety, and with isolation requirements coming through from different governments, the stay indoors policy then drove a certain behavior amongst clients. So the instinct is to try and stay safe. So out of that, again, obviously, it's what kind of services can a client access whilst they are remote? So we've seen trends around spending patterns changing towards more around saving, more around spending around necessities only, and things that can make the isolation scenario kind of more comfortable. So obviously, yes, an acceleration and the pace of acceleration has increased towards digital platforms and related services. um, you know, but I think what determines whether the clients ultimately completely switch over or do they go back to a branch space is things around what is it that they're able to do in the digital environment that allows them to carry on their financial services, carry on their financial services effectively, so to speak. The second thing is, there are certain types of clients who maybe have got trust issues with digital platforms, but this time they are really forced to try and use it. So if it works, then they are more reliant on actually coming to, to do it again, to repeat transacting over digital. So the long and short, in my view, I think that there is probably a place where convergence will happen. A lot of things that will push whether clients are able to transact completely digitally or go back to the branch is functionality that is actually presented by banks on the platforms as one thing. Secondly, the trust factor. If it increases, then we see more, usage of digital platforms. And then the spaces themselves as branches, we'll see them also evolve in terms of accounting for safety, functionality, how many people can actually be in a branch at a time. So all those things determine, do I really want to go and stand in a queue? So if functionality is available on the platform and I can trust it, I'll probably, use it more and go less to the branch.
Yes.
In line with trends that have, sort of started before COVID. Salman, I don't know what your thoughts are on it.
No, I absolutely agree. I think COVID has just, speeded up the trend, has sort of, even pre-COVID, we were talking about capitalization of mobile banking applications, usage of alternative delivery channels by customers. If you look at it internally from a bank's perspective, it's bringing the cost of transactions down if people transact over alternative delivery channels. On the other hand, as far as customers are concerned, it gives them so much more convenience. I mean, why do I need to go to a bank branch and spend so much time if I can do the same transactions through, on my mobile or through my laptop? I think like you rightly pointed out, it's about how focused the industry is on educating the customer, on reaching out to the customer, and showing them how these applications work so that they make it easy for them to use. I completely agree with you. Initially, people are a bit they're a bit concerned. They don't know how an application works or how they're going to maneuver and use the application.
Absolutely.
And so if and there are banks, by the way, that have been fairly aggressive in setting a goal for themselves and saying, okay, we want X%, a high percent of our customers to be able to use our mobile application, for example. And then have gone out, reached out to the customer, educated them, and not just got them to sign on, but got them to use the application. And I think that's the sort of, at the end of the day, people are now, people have moved on to the mobile, and it's probably history now that I'm talking about. Now people want to do most things through this, and if they can, if the banking transaction can be made easier, then they would want to hop on to this channel and use it quite naturally. I think that opportunity is fairly big. COVID, in my view, has just probably exacerbated that, has speeded that up. And banks need to actually start thinking about it. I think number one, transactional solutions. I mean, I open a bank account and then I want to go and use the bank. I want to deposit and I want to withdraw and I want to transfer funds. I want to pay salaries. I want to do X, Y, Z. If I can do that from the comfort of my office or from the comfort of my home, I don't want to drive or walk to a bank and then wait in a line and do that. You make me used to doing that, and I will do that later on, and quicker, and from the comfort of my own location. So I think step one is that, and number two, I think people are now getting used to used to connecting through platforms like Zoom, etc. And I think that's a wonderful opportunity for banks to actually think about reaching out to the customer one-on-one, getting their attention. Especially, I mean, I've seen, the top 10% customer base of banks in Pakistan provide most of the business to them. And only 1% of that is engaged. So this is, and the rest of the 9% actually don't have that sort of engagement. This is a wonderful opportunity that people are getting used to these platforms for banks to actually start thinking about how to make this a standard operating procedure for somebody in a branch to reach out and connect with a customer and take some time and start talking about financial needs, building a relationship, understanding behaviors and solving problems. So I think a lot of work to be done by the industry and to be sensitive about the needs of the customer and move forward post-COVID. So these sorts of things have happened post-COVID. One, speeding up of thinking around alternative delivery channels. Two, these sorts of platforms that will help in further relationship building with the customer.
So before Shorchun, you jump in here, and sorry, my internet connection was weak. Salman, you mentioned a lot on branches. I know you are an expert on.
Just give me 1 second. I need to just plug my computer and I'm losing some battery. Just 1 minute, please.
No problem. So Fortune, I will, in the meantime, Salman is discussing, I will bring this question to you. So Salman is a veteran in improving and building.
I'm so sorry, Umar. Go ahead.
No problem. So I want to ask you, and one of the questions that I frequently get, and this is the context that we have, that, that people often tend to visit, a branch for the social interaction. Often, even if it's withdrawing some money or, depositing some money or getting a check or a purchase order or anything of that sort, right? So it is maybe an innate human behavior that till you are able to physically talk to someone and interact with them, that experience does not feel complete. So in your opinion, right, and the whole purpose of branch managers and relationship managers, as Salman mentioned, is to build those relationships with those customers. How can banks today, in a world where branches are not maybe as common or, as big or as spread out, how can they build those relationships with those customers? How can they ensure that their customers remain engaged with the RMs and the branch managers without them having to visit a physical branch? Before you answer that, for everyone who is tuning right now, we have a little poll. Please answer the poll and then we will discuss the answers at the end. But yes, Fortune, please go ahead.
Okay, yeah, so yes, there are some cultural elements that will present themselves in different contexts. So probably from an emerging markets point of view, if you look at a developed world point of view, the stage of evolution of those markets will probably will be in different spaces. So I would say that, probably in the developed market setting, you will find that in some cases, the need to go to a branch is actually not there at all. You will find clients who will stay a long time without ever, needing to visit the branch, or even a year, or, will pass by and you haven't gone to the branch. Your card will come to you in the mail. You can do everything. And I'm sure Salman will tell you from where he is in Toronto, when he last went to a branch. So the thing that will keep a client coming to the branch is one, yes, if there's a cultural element to it that, maybe in a market specific context, they feel like they need to see somebody, and then, they trust that their instruction is going to be carried out. Then the second element is around, does it work? So if the client raises an instruction through a digital channel, does it get fulfilled without somebody needing to follow up, without it getting lost somewhere? And therefore the client feels, the only way to get this thing done is if I'm there in their faces. Otherwise, if that can be resolved in terms of functionality packed on the platform, it works every time you use it. It's convenient, it's simple. I will have no need to go and visit a physical branch. So I just wanted to get those two things out of the way. That being said, even as a bank, obviously the bank will want to say, how best can I serve my clients? And, digital platforms have a way of bringing in, reducing the transaction costs. The cost to serve a client will significantly decrease. You quite often upwards of 50%, more, or 50% much less to serve a client on a digital platform than through a branch or a physical face-to-face channel. So those cultural nuances come into play, but some of them are propagated or exacerbated by the lack of consistency and trust that a lack of trust that develops if the channels are not working properly. So if those things can be gotten right, I see that even in context or settings where customers feel they need to go to the branch, that will reduce. And then also, social interaction is also evolving, now. Social interaction, even in this era of COVID, is mostly you have a Zoom call like we're doing now. You have a WhatsApp call. So, video assisted banking, voice assisted banking, things like those things, artificial intelligence based chatbots, all those, technologies that are coming up around, serving clients, through digital platforms and being able to offer them the financial services they need. Those will play a big part in actually reducing traffic flow to the branch. So what I see is different evolution stages by markets would determine the extent to which a customer will want to go to the branch. And then secondly, maybe the type of client who ends up going to the branch is one, maybe who needs certain specific types of transactions, perhaps an SME client. So you will probably still see a convergence between completely remote and, some physical touch point for a client like an SME profile who wants to get certain things, maybe from an RM or high net worth clients who wants to have that. But I think there are ways to bridge the social interaction requirement that clients may have through all these technology capabilities that are coming through. So I see a convergence. And recently I picked up a word from the World Economic Forum. There was a recent publication that talked about, coined the phrase they were calling phygital, which is a convergence between the physical space and the digital banking, ecosystem. So maybe I leave it there for now.
So thank you, Fortune, for bringing up digital, and I wanted to use the second part of this discussion to focus on the digital element of banking in retail. And Salman, I have an interesting question for you. You work with branch managers and relationship managers all over, and you understand how they work. You understand, on the expertise, the basis of which they are doing their job, and what separates a good RM from a not so effective RM. From that, I want to understand, right? So where does the role of digital play in digitizing these physical parts of the banking industry? So the branches, and more specifically RMs and BMs, right? So they have a very specific way of operating. In some cases, it could be argued that an increase in adoption of online channels, to some degree hurts their business. Right? If I think about it, yesterday, and anyone thinks about it, yesterday, I might go to, a branch and talk to my RM to transfer some money. Today, I might just do it from my mobile app, and I've completely taken him out of the equation, right? So what can be done from a bank perspective to make those branch managers and relationship managers effective assets in the company and in the bank, and from a branch manager perspective, what encourages them to promote the use of these online channels by their individual customers, right? So that their needs and their way of working changes.
I think that's a very good question, uh, and at the same time, I think it's made the branch manager and the RM's job clearer. Um, the banking industry was always, before COVID also, was always thinking about and marching slowly, I would say, towards the digital solutions, digital transactional solutions. I mean, the two things I think that we need to, maybe talk about. One is I want my transactional solutions. If you can give them to me through digital means, and if you understand that I need to be trained and train me on how to use them. For example, let's take the ATM. Before the ATM came, people were, I remember that we used to have ATM attendants standing outside branches or inside the branches, asking people that if you're going to cash a check, why don't you use your ATM and go to the ATM machine? And here, let me come and show you how to use the ATM machine. I mean, I've seen that era, by the way. And people were very skeptical, would not want to touch something, and then, were not too confident about using the ATM. Now, if you don't have an ATM card or ATM card penetration, you're inefficient. I mean, people just feel that as a bank, how could you not have an ATM card? So, similarly, that's evolved to mobile banking or digital solutions. And let's just take it step by step. I mean, transactional solutions, I still want to use your alternative delivery channel. One. Number two, once you have sold me the product, I can, the usage of the product, if that can be made easy through digital means, for example, you sold me an investment, and if I can look at your product screens and make reinvestments or decide on my next line of action, that's great. If you've sold me a borrowing product and I need to pay back my my regular installments, how can I do it through standing orders or through a click of a button? I don't want to talk to you as much to just do those normal transactions. I don't want to call up somebody and say, because that's a waste of time. In the past, I was used to going to the bank, but not now. So transactional solutions and post-sales, services. That's one. Like Fortune pointed out, however, if I have a problem, if I can solve that problem, I mean, that's where I think we need to graduate. If I can solve that problem through simply sending you a message and having an efficient response to the message and the problem solved, that's great. But that's not, I don't think we're there right now. I think if we have a problem, we'll still go to the bank and still want to talk to somebody face to face because we're still not confident that it'll get done. So complaint resolution is something that banks need to think about. Can we solve many complaints efficiently through alternative channels rather than somebody walking into the bank? That'll take the time away from the branch manager and the relationship manager to focus on other things. Now, having said this, how does the bank's RM and the BM's role become more clearer? Because you're there to build relationships. You're there to actually reach out to your existing customers, get their share of mind, get to know them getting to know you, start feeling comfortable, they feel comfortable with you as well, and then start understanding their financial needs and presenting solutions to them, rather than spend more time just trying to give them, just trying to help them with their transactional solutions. You start to help them with their financial problems. So I think that makes the role much clearer. In our market, I think the BMs and the RMs are too busy trying to, they think their job is primarily just to provide the transactional solutions to customers, and selling the next product or trying to find out the next need and putting the next product in front of the customer is not part of their overall thought process. And especially with their existing customers. So I think this kind of, if we take the transaction solutions off the table to alternative, easier to use means, and get the RM and BM to focus on building relationships, that's where it'll be better for the customer, better for the bank and the industry as a whole as well.
Absolutely. And Salman, you bring up a very important point where relationship managers and branch managers, what is their role, right? So from what I understand it, and spending a lot of time with you as well, and I understand it is really to understand the need of the customer and to serve those needs as best as possible. And that doesn't mean that you wait for the customer to come to you and tell you what his needs are. It's for you to understand his needs. So that leads me to a very interesting question. And Fortune, I know you share this thought because I know you believe in the power of digital in retail banking. So one of the problems that when we also talk to bank as PFM providers, when we talk to banks, one of the problems that we see that the banks face is, how can they understand their customer better, right? So how can they perceive the needs of their customer better? How can they understand them and effectively serve them? So, and so what do you think, and what are some ideas that you think is good for banks to embark on, some digital initiatives that are good for banks to embark on, for their customer, for them to be able to understand their customers better, and at the same time leave those customers more engaged than they were before?
Thanks, Uma. I think just maybe one thing to sort of touch on and link it from the discussion point that Salman was touching on when he was talking about RMs, and then link it to the question you're asking about, problems that banks face, common problems, and then solutions. I think that obviously when you look at digital technologies in the many contexts that they're used, whether it's financial services or any other industry, they tend to be exponential in terms of their impact on the growth or the scale, the upside. So once you deploy digital technologies to reduce the cost of doing transactions, you also expect that because of convenience, client uptake will increase. And therefore more business for the bank, for the institution, more revenue for the RM, and etc. So digital technologies deployed correctly are meant to actually improve, efficiency for both the staff that are working for the bank, and the client, and that is what then creates repeat business, and everybody's happy. Client is happy, RM will be happy. And the RM then can be redeployed to do more productive activities, like how do you actually strategize to create more wealth for a client? What are the value addition areas you can have? When you look at financial services itself, again, there's a wide open space of a lot of things that are happening as far as digital technologies are concerned. But when you look at the trends of the moment, one of the things I mentioned earlier is around clients are inclined to spend only on the necessary things at the moment. You've done some surveys that show changing spending patterns, clients or customers, consumers spending more only on necessities, looking for ways to actually manage their money smarter, save much more for specific goals. So things like personal financial management tools become essential, for both the client and the bank to understand, what are they actually spending on in a month? How do they create savings goals that actually help them achieve certain wealth creation milestones in life, etc. So whether you look at it from an emerging markets point of view or from a developed market point of view, you will find that the common thing that is coming out and being accelerated by COVID is the awareness to think about, how am I spending my money? Am I able to save? So if you are able to offer such a solution to a client, you endear yourself well to that client, right? To be able to help them manage their funds better. So apart from transactional convenience, which is a key bread and butter kind of pain point, it's around, how do you help clients become more financially literate? How do you help them actually save better by using digital technologies? So those are some of the key challenges that I see arising out of the trends that are happening now, and some solutions that financial services or banks can offer and can tap into to actually create efficiencies for both themselves, their staff, and also for clients. Yeah.
Okay, great. And just on that thought, right? So now more and more we're seeing PFM, as you said, one of the technologies that has seen a lot of adoption of late. A lot of other technologies or technology services that have come up for the banking sphere. And let's be honest with ourselves. The reason you often see you are also seeing a lot of innovation in the banking sphere. Actually, this is my personal opinion, and because banks traditionally have fallen into the status quo because banking is an essential need of the customer, and as a depositor, the banks have always been good. But now with the rise of fintechs and digital banks and the new era of banking, I think banks have realized this need even more. But one of the questions, and Salman, when you are also talking to banks, when you talk about the BME solution, or when you talk about any other digital solution you offer to banks, these are all new concepts for the banking industry. And in the bank, and when you talk to a banker, the first question that you get, and this many bankers is very funny, is what's the ROI, right? The ROI for a product that you know about, is maybe a little bit clearer. But these are new technologies, so in some ways, it is potentially, things are a little bit risky propositions for a bank, and only if they invest in it will they start seeing those results. So how do you get banks to start thinking this way, and how do you encourage them to look beyond just a specific dollar term ROI, right? And tell them that this is the need of the future.
Yeah, I think, by the way, very simple to show them ROI, because you simply take the top, you look at their data, and you start seeing, and you compare. Actually, if I look at a branch, so let me boil it down to something a little bit more simple. If I take a branch, and I take a branch of say 2,500 or 5,000 customers, generally in the, I want to sort of say that I've worked with the industry in Pakistan, and Fortune can throw some light on his markets. The top 10% will provide most of the 90% of, we are a very deposits-led, by the way, market. So 90% of the deposits come from there. Only 1%, the top 25 customers are the customers with which there is a relationship, and the number of products that are being sold to them are beyond one product. The rest of the 450 odd customers in the branch have the wallet, but they're not being provided products and services. So the idea is, you've got relationship managers, you've got a branch manager, you've got data, you've got your analytics team, you've got some predictive analysis. How can you work all of this together and reach out to the customer, start building a relationships and solving, because everyone does have transactional needs, has some borrowing needs at some point in time in their lives, has some saving needs, and wants to protect their funds. So how many times, for example, I mean, we're all sitting here, how many times has an RM reached out to you and taken your share of mind, built a relationship with you, and said, listen, I'm the guy that you need to come back to. I'm the expert sitting in your branch, and I understand your needs, and I will solve your problems. So that's when you start doing that with the, say, 450 customers of the branch. And you just map you do a 360 of the customer, and you say, how many products, what is the behavior of the customer? What's the profile of the customer? How many products have you sold to this customer? And then you start taking them through a journey of what is the possibility. And I'll tell you, the possibilities are in multiples. The banks who actually land up selling 3 to 4 products to the top 10% of their customers um, generate 4 to 5 times more revenue per branch. Their customers are happier. And so if you take, engagement of customers, these customers, banks who do this, make more money and have more engaged customers. So ROI, showing ROI is very, very simple. It's about actually taking the bank through the journey of how to get it done. Even understanding the concept is very simple. I mean, a lot of people will say, yes, this is it. This is how we should do it. Now, when you then take it down to the distribution channels, the BMs, the RMs, the way the KPIs are designed, and the way head office interacts with the branches in communicating how to get those KPIs done. So, I mean, all of these things then need modifications and a change of thinking. But there is enough empirical evidence out there. Once done, the results actually start to show, and it's common sense. I mean, it's not. We're not talking about Mars concept.
Yeah, if I can just jump in there and add a point on the ROI discussion.
Sure, and then we get to the question.
Yeah, and someone actually said there's enough empirical evidence out there.
Yeah.
A recent MIT study showed that banks or financial services providers that were more inclined to digital transformation actually showed like they were 26% more profitable than those that were not. And that translates also in valuations. You find that they are actually more, like higher, 12% probably higher in terms of valuation than peers who are not embarking on digital transformation. I think the key, just one last point there, is around if you deploy technologies, it's around what does it change for you? What do you stop doing? What do you start doing that is new, more efficient? If you deploy new technologies and do not change anything about where you're deploying your branch resources, what activities they're doing, so that then you can contribute to the productivity on the upside, then that impacts your ROI and you don't extract the full value of what you've actually invested in. There are some good players in different markets doing some, great things around digital, obviously realizing the trends that are coming up. A lot of fintechs doing different things. Some banks are collaborating with fintechs. Some are actually creating semi-autonomous kind of structures around innovation and complete digital banks to actually ensure that they stay relevant and they survive. So I think the subject of ROI, everybody agrees. It's just around how you actually keep clear line of sight of where the upsides are coming and where the cost savings are coming and what you stop doing and what you start doing.
That's right. And I'd just like to add there, Fortune, that you just pointed out something very relevant. I mean, as you move to digitization, obviously the cost of doing business goes down. And at the same time, your opportunity to grow revenues goes up because, like you said, if the RMs now and the BMs are now clearer on what they need to do to use this digitization for transaction solution, but change their habit to go and start putting more products and services out there. That grows revenues.
So thank you guys on that. As I always know, when you ask a banker a question about an ROI, he always has a great answer. So we have a few questions from the audience that I want to get into in a second. Before that, we did do a small poll for our viewers over here. First one is about how many times have you visited a bank branch since the COVID-19 outbreak? Out of all the people watching, 50% of our viewers, and I recognize some of them, so I can say that not all of them are Gen Z. 50% have not visited a branch since the start of COVID, and 0% have visited it more than 3 times. So if people have visited it it's 1 to 3 times at most, but half the population is not visiting a branch. So what that behavior shift that you were talking about, right? So I think necessity drives innovation more than anything. So and I've seen this as a consumer in Pakistan. I bank with 3 banks. All 3 apps have significantly changed in the last 2 months. I've seen the experience significantly change. And and on the second question, right? Second question, we are very basic question from our viewers here. Does your bank know you, right? 62% of people say sometimes I get targeted messages, but most of the time it is generic content, right? So I think these polls, the answers from these polls also is culminated in the problems you guys have identified, right? So I hope those changes are coming. We do have a few questions from the audience and not so much time. So Salman or Fortune, I'll take the first question to you. If you can, within 30 seconds or so. I know the question is quite long, but we have a question from Ms. Shaista Abdullah. There are a lot of implications on internal operational processing before you can migrate a customer to an electronic channel. So how do you propose those implications are being handled? And what practical steps can be taken to transition a customer who has a low literacy rate and only a feature phone? So I know that this is common in Zambia as well. The feature phone penetration rate is quite high. So how do you solve this problem?
In a nutshell, obviously you have to scope. It's about really scoping because the first part of the question is talking about implications when you're doing digital kind of implementation. Mm-hmm. So you have to scope what is impacted and make sure that you look at the how that would look in the new environment, and then any risks that need to be taken care of. And it's basically you have a transition process in place. With regards to digital savviness or literacy and the kind of functionality that is presented on a mobile phone, obviously in emerging markets, Zambia, Africa, smartphone penetration is an issue. I think it's less than 25%. So you have to design also functionality for the feature phone to understand that there's a place, a period, a convergence, mm-hmm. a transition period where the two, worlds would have to converge, and a place where you exist with feature phones in a transition phase to smartphones. So you need to take the feature phone environment into context when designing solutions. How do you customize for that? So essentially that would be my short answer.
Great. And Salman, another question that we have from the audience this is a fair question and a little bit technical. So I'm going to combine 2 questions in one. I think the first one is about, as you mentioned, people are not confident that if they avail a service to a digital channel, it might not be followed through. But the question is, are Pakistani banks investing enough in information security? I can't hear you, so I think your mic is.
Okay, is the question, are the Pakistani banks investing enough in information security?
I think that's what he said.
You can hear me. If you want to take this question, where
I can't hear you. Your voice is completely smudged.
Yes, that's the question.
About
okay. Yeah. Yes. I think banks are generally risk.
You got the question, one.
Okay. Yes, I mean, if you look at, I think I would be very confident saying that the Pakistani banks are definitely investing enough on information security. I think our regulator is also, the State Bank is also quite, I find the State Bank to be, as compared to other economies, other countries, State Bank to be quite hands-on. And there are, as a statement, just a short answer is yes. I find that the banking industry actually invests quite a bit in terms of other malware, etc. And they're they slowly and gradually now moving on to products that will help them in detecting detecting fraudulent issues up much quicker than where they were before. So I wouldn't worry too much about that. I would actually, on the contrary, actually, I would look at the banking industry and say, why aren't you doing more to reach out to the customer and train them about how to use the product? I think the issue is around people not being able to know how to use the product. Different demographics, different sorts of people, different socioeconomics. Very, very quickly. I mean, if you go to to the time when we were introducing the ATM, what was it that made people, at the end of the day, people come to a screen and use the ATM as well, right? And they know how to use it. All sorts of demographics use it. So what was it that made people use the ATM? It was actually the industry reached out to people and showed them how to use it. So I mean, I think the concern is more around there. Yes, there are people who have issues around, security issues and etc. I mean, that does cross your mind, and the banks are doing enough to do it. But I think the bigger issue is how to train people to use the product.
Can't hear you, man. Javeria, we can't hear someone. We can't hear Uma.
Okay,
Yeah, can't hear.
So, final question that we have is.
Yeah. So let me continue.
Can hear you. Javeria will take it.
Yeah. So one last question to the both of you. So Laler of Ijaz here has asked that, given COVID-19 and the emphasis on the use of cashless transactions, because, there are directives from the government as well that you should go cashless because of COVID. Have you observed that there has been an increase in banking transactions? And also, so this is a two-part question. So the other part is that, in your opinion, does this in any way help bring the substantial informal economy, because we know that is huge under the regulated I will be answering over email. So guys, because we're short of time.
Go ahead,
Please,
Fortune.
Fortune. Thank you.
Yeah, I mean, just in terms of trends, I think I would probably speak with the context of the markets near around me. I don't really have a view of Pakistan, but I would think it's the same. So you see a lot of an increase in terms of bank balances. So not necessarily transactions, but savings increasing. And then transactions much more gravitating towards e-commerce transactions. In terms of bringing in the informal economy, obviously, we've seen other additional regulations around increased limits around mobile money transactions, for instance, from regulators in many parts in Africa to enable customers who are transacting, be it in the informal sector, able to do that over mobile money. So mobile money transactions going up, e-commerce transactions, and also generally balances. So that then is a way to bring the cash, convert cash into actually electronic transactions, and maybe monitor it a little bit more from a regulatory point of view.
Javeria, I think the telco-led microbanks have done, if you look at two of the large telco-led microbanks, have done a great job in actually creating the wallet. That has at least got people onto
Definitely.
the informal sector onto transacting through a basic account or a level 0 account. The challenge now is to actually make those into stickier banking accounts. So that's a challenge probably for first it goes to the microfinance banks that are operating within the telcos as to how to convert these transaction wallets into banking accounts, and I think that's a big opportunity as well for those. But I think the telcos are doing a great job. They already have penetration. They know how to bring the customer on and to get them to do transactions. Now the next effort is how do we convert that into stickier, maybe level 1 banking accounts. But definitely there is an opportunity there. I hope that partially answers your question.
Yeah, it definitely does. So I'm sorry, all the questions that haven't been answered because we're out of time now. But I will be responding to them over email. So that's not an issue, but we'll definitely answer those questions as well. So thank you so much, Salman and Fortune. Thank you for being with us and joining us in this interesting discussion. And thank you to all the attendees, to all the participants who were here, who are watching us live on Facebook. So thanks a lot, guys. It was a pleasure having you guys, hosting you guys.
Thank you very much.
Thank you. Thank you so much.
Thank you. You take care. And good to meet with you, Fortune.
Yeah, nice to meet you, Salman. Have a good day, rest of the day there in Toronto.
You take care. You take care. Bye-bye.
Okay.
Bye.
Bye.
All right. Bye.